Richard, thank you so much for chatting with us once again.
Yep, thank you.
Okay, so we're talking iron ore today, and NAB Bank has suggested that it sees iron ore heading back past $80 per tonne in the near term, with even a move to $75 per tonne, possibly by year end. Quite bold forecasting from them. Is it realistic in your view?
I think it is realistic because at the moment there's two factors. There's a big oversupply that's coming through from capacity coming on stream from Rio, BHP and even Vale, and they're trying to oversupply the system. But at the same time, you've also got weak demand still coming out of China. So what we think will happen, these low prices will drive out some of the high-cost producers, particularly the Chinese producers, but even some Australian producers are starting to drop out. So that might help alleviate some of the oversupply. And on the demand side, we think the Chinese production of steels will start picking up next year as their economy starts to pick up. What they've done is they've had an overheating property sector, particularly over through 2014. So they've acted to cool that down. Now it's cooled down. They've been successful with that. They'll probably allow a bit of growth next year in the property sector, which will flow into the construction sector, which will flow on the steel demand, which will flow on to iron ore demand and prices. So $80 not out of the question. You might get 75 by year end, but that's only a couple of weeks away from where we are now. So that maybe that's a bit bullish, but I think $80 next year is quite realistic.
You touched there on Chinese steel construction and a forecasted hike in that, but is this really enough to support Australia's iron ore section?
I think so, because my understanding is that Vale's prices, their marginal cost is probably, it was around in the mid-70s. Now, because of the cut in oil prices, their shipping costs are a little bit lower, so they could probably tolerate something a little bit lower, but really to have enough supply to supply increasing demand, I think you'd need prices above $70, and that steel demand out of China is quite important, and a lot of their high cost producers, they can't sustain, so they will drop out. So I'd say that the prices will come back a bit.
Outside of China then, what other growth factors should we sort of be keeping an eye on?
In terms of iron ore? Well, this is interesting with iron ore. What's happening with iron ore is it to me it looks like all the majors are trying to take control of the market again. They actually had control of the market back in the early 2000s before the Chinese demand took off, and they had an undersupply. And all these people saw the sort of amount of money you could make out of iron ore, so they've all entered the market. A lot of producers in the Pilbara, even Africa, etc. So the iron ore majors have actually lost control of the market. Now they're trying to reassert their authority. They've all got their marginal cost of production are all below $70. A lot of the new producers aren't. They're above $70. So I think they're trying to wipe them out. So and BHP is a case in point. BHP hasn't quite got enough berth capacity in Port Hedland, which is their main port. Now a couple of years ago they were going to do a big expansion, which was $20 billion. Now, maybe BHP's thinking, well, if we wipe out some of these small producers, they might get some berth space back, which will negate the need for a $20 billion expansion to carry their iron ore. So I actually think it looks like the majors are trying to take control of the market again. They may even have Fortescue in their sights, but Fortescue as it keeps ramping up production, its marginal cost is coming down. So, but at this sort of prices, they'd also be struggling at the moment.
Is the sort of iron ore trending prices that we're seeing, is this representative of sort of an overall change in commodity price landscape?
I don't think so. This is just a classic cycle. So we had an undersupply and strong demand in the first half of the 2000s and through most of the 2000s, which then encouraged a whole lot of investment, and what you probably say now, over-investment in iron ore. So now all this supplies come on stream, demand's weakened a bit, the price has collapsed. This has happened before. It's happened in lots of commodities. It's probably happening in coal to a certain extent at the moment, but it's happened in aluminium before. It's happened in nickel before. It's just a classic cycle, and it's not uniform across all the commodities. Some of these commodities have already been through this, and they're starting to recover, like aluminium and zinc. They've been through this. They've shut down their high cost capacity, and that market's starting to recover. So I don't think it's uniform. This is just a real classic story that's happened before, and it may even happen again, 20 years, 50 years in the future.
Richard, thank you very much for your time today.
Okay, thank you.